Hi everyone, welcome back to the Patti Martin Real Estate Group YouTube channel. My name's Adam Wachtel, and today we're talking about the difference between market value and assessment value and how understanding this difference is an important factor when you're buying and selling a home. First, let's define the two terms. Assessment value is the value placed on a home which is determined by a government agency for taxation purposes. The government will look at things like location, condition, recent sales, and use these values to calculate how much tax the homeowner will have to pay to the government. Now keep in mind that the assessed value is determined in July and homeowners are not given their assessment notice until January. So there's a 6-month span there where values or market conditions can drastically change. Interest rates can go up or down. Recent sales in your area for similar properties can go up or down. And in that 6-month span between receiving your assessment notice and when the assessment value is determined, there are many factors that can influence the value of your property. Now, market value, on the other hand, is what a property would sell for on an open market. It is largely determined by what a buyer is willing to pay and what a seller is willing to accept. Now, just like assessment values, you have the same factors or conditions that influence the value of the home. You'll have things like location, condition, nearby sales. You'll also have economic factors like interest rates, which can affect a buyer's purchasing power. Now, it's important to understand that market value and assessment value can be wildly different, and that one doesn't influence the other, and that market value can be higher or lower than assessed value. The assessment value of a property may not accurately reflect the true market value of the property, and vice versa. Now, I want to take you through an example where this couldn't be more evident. And what we're going to be looking at is a condo that's sold in Fairview on West 13th. And we're going to look at the building's recent sales and what that property assessed for, and what my client was able to purchase a property for, and what that assessed value is. So let's have a look now. So guys, I wanted to show you an example of how market value and assessment value can differ. Recently, my client was able to buy a property on West 13th at 1066 West 13th, and it was unit 205. So 2 weeks ago, we bought this property here for $585,000, and you can see that in 2022, when the assessment values came out, that the home was assessed at $650,000. So we clearly bought this below assessment value. So market value, what somebody's willing to pay for a property and what a seller is willing to accept for the property, is different than assessed value. Clearly in this instant, with other comparable and nearby sales and current market conditions, the market value is lower than assessed value. In fact, we've gone down a little bit because the assessed value of 2022 was $594,000. Now, keep in mind that when we look at the building, and one of the closest comparables was unit 204. So let's look at this sale here, unit 204 in the same building. This unit was quite nicely renovated. Now, the sales price of this home on January 21st, 2022, so just before the market really took off, was $702,500, and it was assessed at $667,900. If we look into this a little bit further, you can see that the market value at the time, given the current market conditions, was quite a bit more than its assessed value. And in the previous year, the assessed value was only $622,500. So there you have it, guys, the difference between market value and assessment value and how the two aren't really related. If you're trying to find market value, make sure you're looking at similar and comparable properties and finding a value range of what they're typically listed for and selling for, and that'll help you get you the best and closest market value of any home.